Hello everyone, Jeff Green here again with another market timing and market analysis update in preparation for fiscal week 16, which starts on April 18th, 2022. So this week was a mixed week of market movements. Earnings began in earnest this week, and about 7% of the S&P 500 companies have reported earnings. 77% of those reporting have beaten their earnings estimate, and about 80% have beaten their revenue estimate. So it was, in general, a good week for earnings, but Friday saw a mixed batch of earnings coming out, which pushed the markets sharply down on the end of the week and sent all the major indexes into a loss for the week. So before I go further, please like and subscribe if these videos are useful for you. That will be a great help. Thank you very much. And so we're going to take a look at VTI this week. And then as a follow-on from last week when I did a discussion on value stocks versus growth stocks, we're going to take a look at the ARKK VTI, which is, in my opinion, the epitome of growth stock. So let's take a look at VTI for this week and see what we can reasonably expect for the upcoming week of trading. So again, weekly on the left, daily on the right. Let me get my pen here because I like to scribble all over these charts. So let's see what can we glean from this. So on the daily chart, we're sort of stuck at this level of support here. That this line has been on this chart for quite a few months, I would say. We seem to be trading between a channel here and a sort of a channel down here with another major line of support. So looking at the indicators, we got a big tail off in volume here, which is usually indicative of a pretty strong base. We've got the MACD sort of approaching zero, which is kind of bearish. We got the on-balance volume not looking very lively. We've got the advanced decline line on the New York Stock Exchange continuing to decline below its moving average. And on the NASDAQ, the advanced decline is even a little bit worse. And we got really nothing here on the ADX or DMI. We got DMI minus above DMI plus. So things are looking a little bearish here. However, we are trading right, as I mentioned, at a level of support. So we'll see how that works out for the week. On the weekly basis, we got the Chiku line, which is this blue line firmly below prices, which is a fairly bearish indication. What you want to see is this blue line sort of get back above the current set of prices, which would put the market in a more bullish mode. We got these red clouds out in front of us here, which is not good on a long-term basis. Quite clearly, you can see the decrease in volume as we sort of work to create a new base here. On the weekly chart, the on-balance volume is sort of comatose. The advanced decline on the New York Stock Exchange may be sort of making a base here, but NASDAQ, also known as growth stocks, is just not a good deal on growth stocks at the present time. We've got DMI minus above DMI plus, and so this is a pretty negative situation, especially MACD below the zero line. You can go back and look at just about any chart, and anytime MACD is below zero, that's a very strong indication of a bearish, environment. Here's another example on the daily chart. Just look at where we went on the MACD. It's all below zero up until this point, where we got, guess what, a pretty good bounce here as the MACD moved above. But now we're at risk of going below zero again. So what would I expect for this coming week? What's reasonable to expect, which is really what market timing is all about. Let me get rid of these. So if we maintain this level of support at the present level, we might get a bounce here, but we've still got this overhead downtrend line that we need to close above before we can safely say we're back in a more stronger environment. I think there's a possibility we might come down to this level of support down here. So I think this market bears watching for both directions. And of course, we're going to find stocks that buck the trend and move up while the market's moving down. But I think this is a critical line of support that we need to hold if we're going to use these as use this price level as a springboard for another base. So That's what you can reasonably expect this week. Let's take a look at, I'm going to erase all this stuff. Let's take a look at the ARKK VTI, and it's quite frankly dismal. I just put this line, this downtrend line on it just last week. I mean, I haven't been looking at this ETF ever since way back last year when it reached a high of right around 160. So since it reached that high, it's now down, well, what is that, 2/3 now. So it's in a strong downtrend. You might be able to anticipate a bounce up to here, but then you've got this strong downtrend right overhead. You've got this giant cloud in front of you, and another one on the daily basis. And when you start to look at Ikimoku charts, it's very insightful. You can see that once this Chiku line got below the current line of prices, and these sorts of red clouds start showing up, you can just bet that this is going to be in a downtrend. Let's see, MACD below 0. They tried to look a little bit stronger on a bearish bounce here, but we just didn't close above this line at all. So in general, in my view, growth stocks are not where it's at. Value stocks is a lot stronger, even though we're in a pressured market. And you can go back and watch last week's video on growth versus value stock. So I hope that helps. Please like and subscribe and comment. That would be great. And hope you have a great week trading. And we'll talk to you again next week.